Welcome back to the Ticks and Trades channel. I'm Sam Morton. In today's recap, we are reviewing the daily levels and the game plans that were posted before the bell each morning from Monday, July 21st through Friday, August 1st. That's the period of time in this box, the last 10 days. There has not been a recap video posted since July 18. These game plans outline the most probable price action based on structure and timing. They're not predictions, they're just tools for preparedness. And we'll look at the recordings of the days where I was available to record the price action in my own active trades. I really didn't trade much during the last couple weeks. There were several days of travel and even more days where I just didn't have the time to focus on the market. So I didn't put money at risk on those days. We'll come back to this chart, this daily chart of the SPY, to talk about what's happening currently. Today is Sunday, August 3, and it's clear something is happening now. Just look at the last few days here. So we'll first walk through what each day looked like before the opening bell by reviewing the daily levels and the game plans for each day. So Monday, July 21st, we entered the day still riding a bullish trend with no clear reversal signals on the higher time frames. The zone between 627.95 and 628.20 was expected to be a critical support area. If price held above that zone, the bulls could grind higher and possibly challenge the levels above. However, a move below might give the bear something to work with. The broader outlook remained bullish unless multiple time frame signals pointed otherwise. And here is a screenshot of what the SPY looked like with the levels right before the opening bell on Tuesday. The recording of the live trades, or just price action here for Monday, basically shows that I did not get into any trades. I was busy that day preparing for travel the next day on Tuesday, so I recorded this, but as you can see, I did not get into any trades, but I'll just scrub ahead here to show you the entire day. This was Tuesday, July 22nd. This outlook called for an interesting setup. The big picture was still bullish, and the prior day's price action hinted at a potential consolidation pattern. If the bulls defended the 628.78 to 628.20 zone, which is also a trend line, it could be a springboard for another leg higher. However, the timing of the recent rally left the door open for a pullback. A breakdown below 628 and a confirmed close under that level might give the bears an edge. Traders were advised to pay attention to what the market did at that key zone. There is no recording of price action for Tuesday because I was on a plane all morning traveling. No recording and no live trades. Here's Wednesday. The focus was on the ongoing battle with the trend line we've been tracking since early July. The bulls had pushed price above it, but the question was whether that move could sustain. A strong close above 631.50 could negate a possible 4-hour reversal signal that we had seen earlier in the week. On the flip side, a drop back down to 628.60, the trend line level for the day, would put pressure on the bulls to defend. With all charts still looking bullish, the base case was a continuation higher. My trade on Wednesday was a disaster. I was trying to work on other things in the morning, and I missed two opportunities when price came into a couple levels. Early on, I missed the 630.77 when they fell below. They were under this, should have went short. That was playing by the rules. They were under this at 6:45 a.m., I'm saying. That was the close. And then I also missed 632.42. I was asleep at the wheel, working on something, did not see this spike up here where they spiked it, came back down. That level worked great. As you will see on the tracking logs later, these two trades worked out pretty well. Should have been all you would have had that day. But I got into a short trade thinking that the bears were going to come out and possibly drive price down. I misjudged that. I was probably a week too early or so. But anyway, I'm short in a position now. Right here, you can see this kind of arbitrary. I think they're going to get below this 632, but they ended up going higher. Did not read the writing on the wall. And I stayed in this trade way too long and got out pretty much the last minute of the open session and gave $6,000 back to the market. So notice the time here, basically get out, closes the position just at the market, which is kind of a good thing I did then. You can see the post market here. Here, just repeated. Let me just go back to the very end here. Try to pause this. The very end. 1 second remaining. Yeah, so the post-market futures just shot up, and I was out before that happened. So that's pretty good. But anyway, Wednesday was somewhat of a bloodbath for me. On Thursday, July 24, the game plan flagged at the trend line around 633.70 to 634.10 as an axis level for the day. Holding above it might allow the bulls to continue their advance, while falling below could open the door to a reset. We also had a 9:45 a.m. PMI release on deck. That's a known volatility catalyst that could shape the tone for the session. With signs of a cyclical timing event in play and price extending from previous moves, caution was warranted. There was still nothing bearish in the big picture, but profit taking and fast moves were a possibility. I've got a recording for Thursday, July 24. I chose not to get into any trades on Thursday. I was still busy with other work. And instead of trying to juggle things and run the risk of doing something stupid again, I just let the market go and did not get involved on this day. So I'll scrub ahead here to show you price action until the close. Unless I'll stop this early, but I think I let it go all the way until 4 o'clock. Yes, I did. For Friday, July 25, the file that contained my recording of the daily levels and the game plan was accidentally copied over. So we don't have the game plan commentary for this day, but I do have a record of the levels. So here's Friday. It was still going up here. So price was hovering near all-time highs at this point, with resistance at 639.02 and several levels stacked below. With the market extended and no obvious reversal signal yet, the assumption was more of the same, bullish until proven otherwise. And there is no recording of price action on Friday because it was another travel day. I was away from the screens all morning, no trades on Friday. Now we're at Monday, July 28. The bulls continued to push higher, and we noted that SPY was again testing the upper bounds of logic, breaking through resistance with little hesitation. A trendline zone between 637.40 and 637.50 was key. The pre-market price had moved above it, suggesting continued strength. But we cautioned that a reset could occur at any moment, especially if profit-taking set in. Until clear reversal signals appeared, the plan was to trade the levels with discipline and prepare for a possible shift. Another travel day on Monday, no recording of price action, and no trades for me. Or Tuesday, July 29, it was the day before the FOMC announcement. We expected a more muted session. Typically, you would see that in the summertime. Still, the bullish grind continued, and 640 was listed as a big round number that could attract price. The zone between 636.38 and the trend line above it was important. If the bulls held above, the path higher remained open. But if price dropped below and closed daily candles under that zone, a reversal could begin to take shape. Without confirmation, however, the bulls were still in control. I was able to get into a quick trade Tuesday morning on the 29th. Got a 4-point base hit on 6 contracts. Happens pretty fast. It was at the 637.46 level. This was by the rules, quick and easy. That little blip you saw was basically 4 points with 6 contracts. That's $1,200. That was all I did on this day. Here's the rest of the recording. I'll scrub ahead here. In the tracking log, which we'll look at later, you'll see how sticking to the rules would have landed you several base hits on this day, trading at the levels. But this is me just letting this go to give you something to look at for the rest of the day. One trade for me. So this is Wednesday. On the morning of the FOMC day, we saw price trading below the trendline zone and noted that it could be our first sign of meaningful weakness. Some smaller time frames were also slipping below their 50-period moving averages, and these were early clues that a pullback or a full reversal might be underway. Still, the broader picture remained bullish unless price fell below 629 and held there. With the FOMC at 2 p.m. Eastern, we recommended caution after 1 p.m., that's Eastern time. Big swings were likely, and the safer move was to step aside until the dust settled. No trades again for me on this day. I don't mind trading on FOMC days, but I just want to be wrapped up by lunchtime, definitely by 1 p.m. I just didn't have time to pay attention on this day, morning meetings, other things I needed to focus on. So I missed the opportunities in the morning. As you can see, the zone that was identified before the opening bell provided a good short trade if you chose to take it. And we'll move ahead so you can see price came up into the zone and pulled away. That was really the trade of the day. Then after 2 o'clock, things kind of got whippy, as you might expect. Pay attention to 631.54, by the way. I do not advocate taking trades after 1 p.m. or so on FOMC days because you never know what's going to happen, really, unless there's really, really clear signals. But anyway, they came all the way down. This is approaching 3 o'clock here and hit 631.54 to the penny and bounced. So that's pretty interesting. I wouldn't have taken it, but, it was available if someone were adventurous. Anyway, that was Wednesday, July 30. But the real action started in the next couple days. Here is Thursday, July 31st. So post FOMC, the SPY had already made a round trip from 631.54 to 640, that kind of big round number. The pre-market, they got up there to 640. That reinforced the idea that 640 was a magnet, but with extended price action, a reset became more probable. We flagged the trend line. That was a zone around 637. That was the line the bears needed to break. If price held above, the bullish structure remained intact, but if not, downside acceleration was possible. With more data releases and general uncertainty, it was a day where traders were encouraged to be alert or stand down. I did get into a couple trades on Thursday. They weren't exactly clean, but I was able to get back some of the losses from the previous week. Once again, I didn't really play by my own rules. I started out by misjudging when the bears would come out, so I gave some points back on the first short trade. Getting ahead of myself here, but I'll scrub ahead to show you when that happened. I got back in with another short after I took half of this trade off. Ended up being short 8, I believe. So I did get short again at 638.24 instead of some arbitrary level. So I ended up bagging over 30 points on that last run. So I'll give some money back here. And then I get short again. And this time it works out. I write it down, trail it with a couple contracts. Oh, I'm back up a little bit. I ended up having to jump out at just close the position out of the market around 1:30 p.m. or so. Had to head into another meeting, so that's why everything just disappears. I got out before price had a chance to get down to that target you saw below or get stopped out by the trailer. It was a good day, though. Over $3,000. I'll just let this go to the end of the day. That was trades I was involved in. So Friday, August 1st, it's still posted online here, so I'm just on the Ticks&Trades.com website here, the member side. So we questioned whether Thursday's big down candle marked the beginning of a bigger pullback. Price had spiked above 640 and then retreated pretty hard. So with SPY trading below the key trend line at 629.51 in the pre-market, we noted that sustained action under 628 could tip the balance in favor of the bears. If price rallied back above the trend lines, it might be just another fake out, but if it didn't, a broader move lower could be underway. The day also brought data releases that could act as catalysts, so caution and flexibility were emphasized. Here's the rest of the game plan for the day and what the SPY looked like at 8:51 a.m. Friday morning. Once again, I took no trades on Friday, August 1st. Here is a recording of the entire day just to show that I was on the sidelines. Coming up next is the tracking log, which you will see how most of the days during the past couple weeks gave good trades at the levels. If you know the rules and you're willing to stick to them, the base hits add up. So this recording goes through 4 o'clock per usual. The first tracking log is the playing by the rules log. All the notes for each day for the last 10 trading days, starting with July 21st, are here. If you're serious about how this trading strategy works, you have all the information needed to go back in time and plot the levels for each day to see for yourself how they worked. In most cases, the levels are precise enough to pull at least 4 points in the E-minis as scalp trades. Trade management based on the rules isn't something I cover here, but it's all explained in the E-mini Trading 101 course if you are interested. So far in 2025, the rate of return is over 125%. That's this right here. This is the process-driven approach, trading each level every day following a set of rules. If you started 2025 with a $50,000 balance and traded just 2 contracts at each level, taking the bad with the good, you would have added $62,000 to your account. So the win ratio so far is 76%. And here is the Sam's Trades log. These are the trades that you have seen all year. Every one of the trades that I take are recorded and shared on this channel. This is the result. I haven't traded every day, as you know. I've just traded 89 days so far this year, but the win ratio is pretty good, even with bad days like last week when I gave back a chunk of money to the market. I honestly don't advocate making up your own rules. It's just much easier to follow a defined process. Sometimes I just like to get adventurous and take chances, and it pays off sometimes. But the price I pay when it does not work out is evidenced by what happened last week on July 23. I'll try not to let that kind of thing happen again. But anyway, not that you probably care about my trades all that much, you're likely wondering how you can apply these principles and insight to your own trading and make money. Well, again, I can just point you to the course that I developed that covers the behind the scenes, where these levels come from and how to trade them systematically. That's ticksandtrades.com. Just check out courses and you can read about it there. So back to the daily chart. So where do they bounce from? There is a trend line that has informed several trades. If I zoom way out here, maybe it helps to go to a weekly chart. There we go. There's a trend line that starts from this high here up to here. That's close enough. Go back to a daily chart. There we go. You can make the case this was the area they could not get above and fell away from it. And when you look at a weekly chart, it starts to make more sense. They just spiked above it. If we go to the monthly chart here, I just want to point out something here. We had this big tail candle, a lot of volume. And I did mention back probably during this month of May here that a lot of times they try to retrace portions of a tail candle like this, a reversal candle, before the actual change happens. In this case, they just took off from there. So this is very bullish the whole time. Well, what we see in some other charts, not necessarily the SPY, some other indicators, some other indexes that I track, is the month of July gave a pretty nice little doji candle, or maybe bigger than little doji candle, like a tail candle type thing, on higher than average volume. So some of these lead to the SPY. So if that's the case, then we might see a pullback following. It could take a few months. Not to get ahead of myself here or anything, but we look at the daily chart again, we have to talk about where they might be going. So first of all, they're bullish in the big picture because the monthly, the weekly, and the daily are all above the 50-period moving average. They're coming down. There is an area right here. I'm hovering in this general area where they broke out from. So they got up to this high back whenever this was, February. And when they finally got back above it here, this is a breakout area. So if they come back down here in a straight line, or even not in a straight line, this area probably going to coincide with the 50-period moving average at this point. This is support, most likely. So in other words, if they get a bounce here, that's great. We can probably get some small trades out of here. But if they get below this area, down here somewhere, and there's other support areas, and certainly below the 50-period moving average, then the big picture could start looking somewhat bearish. But that's just the daily chart. Weekly chart, they've got to get down below its 50-period before the weekly chart looks bearish. So that's kind of the way I see it, the big picture. Let's just focus one day at a time. Maybe I'll go to, as we go farther down, what do we have here? The 2-hour chart. You see where they're at. They're below the 50 and the 100. Doesn't look great on the 2-hour, but it's only been a couple days here. We'll see what happens. Then here's the 1-hour chart. They're below the 200-period moving average on the 1-hour. Now, I'm not looking at the pre-market or anything. This is Sunday evening. Market opens tomorrow. Things could change a lot, but just to give you a big picture, there will be support, or at least important areas in this general range here. 613, 612. I'll get it refined by tomorrow morning. And those who subscribe to the daily levels and the game plans will have access to those tomorrow morning before the opening bell. So that wraps up our 2-week look ahead. Remember, these insights are written before the market opens, without the benefit of hindsight. The key is being ready for all scenarios. You need to manage the risk and just let price confirm the story. Thanks for watching. Hit subscribe and stay tuned for more recap videos. Until next time, trade well and stay sharp. I will talk to you again soon.